what are the approaches that are available. So the first thing that we should keep in mind is when a rent concession involves a deferred payment only, the change is accounted for by recognizing the impact in the period when no payment is to be made by continuing to reduce the lease liability. So effectively what we are trying to say is that the lease liability should reduce for the period in which it was due, because you have to reflect the fact that you have got a benefit from the waiver, or you have got a benefit of a deferral. So your lease liability should get impacted because of this change. Let's take an example and see what are the two approaches that are possible. Lessee X enters into a lease contract with Y for an office building. The lease commencement date is 1st of March 2020. The monthly payments are 2,000 rupees per month, payable at the end of the month. The incremental borrowing rate is 6%. The business has seen an impact on account of COVID-19 and a rent concession is negotiated. The effect of this negotiation is that the rent for the month of July is deferred, and instead future lease rentals are revised to 2,100 rupees. So what I have done is I am saying, effective from the month of July 2020, there are 20 more months left in this lease agreement. Please pay me 100 rupees more in each of those months and don't pay me any rent for the month of June. So there is no rent to be paid in June. So the payout in June is 0, but that amount is effectively adjusted in the next 20 lease payments by paying an additional 100 rupees. Let's assume all the other conditions of the practical expedient are met. No substantial difference in the agreements. Then the other condition around the rent concession being the period before June 2021 being met, all of those conditions are met. Option 1 that is available to account for this is to recognize this deferral based on the original terms of the contract. So what I would do is remeasure my liability by discounting 2,100 rupees that I will receive in each of the subsequent months with my original incremental borrowing rate of 6%. And this is where we said there is an expedient available. Instead of taking a new rent or a new discount rate, keep the original discount rate. What it would have then meant is effectively on 1st of March, my ROU asset and liability would have been a present value of 10,000 rupees per month, discounted at 6% per annum. Just before the modification, my ROU asset would have been 39,485 and a lease liability of 39,776. Under the revised terms, my ROU asset would not have been impacted. What would have got impacted is my lease liability, and this 39,874 is the present value of 2,100 discounted at 6%. As you can see, this results in a difference in a lease liability of 98 rupees, which is recognized in the P&L. So this approach does impact P&L. It does not impact ROU, it impacts the lease liability and impacts P&L. But let's look at what would have happened if the expedient was not availed. Had the practical expedient not been availed, one would have said, is the scope of the asset decreasing? The answer is no. We would then have said, okay, it's not a new lease because scope of asset is not increasing, scope of asset is not reducing. What I have done is change the rental. We would have discounted 2,100 rupees by the prevailing discount rate on the date of modification. We would not have discounted it by 6%, but would have discounted it by the rate prevailing on 31st of May. And that would have then got adjusted to the ROU asset and not to the P&L. So that's approach 1 that is available in the expedient, in applying the expedient. Approach 2 would be to ignore the time value of money of that 100 rupees. What this second approach says is effectively you bifurcate the 2,100 rupees that you are paying in the future into payouts of 2,000 rupees of the original liability and 2,000 rupees of the rental for the month of June. In this case, you do not remeasure the lease liability, do not remeasure the ROU asset. And I'll very quickly talk about how the leasing schedule would have looked in that case. On the date when the lease would have started, both the liability and ROU would have been at 45,126. We would have recognized an interest expense at 6%, recognized a payment to reduce the liability, and would have come at a closing balance of 43,351. We would have done the same thing till we reached the end of May. Now, effective June, I have payment holiday, so I don't pay anything. But time value of money on this outstanding balance continues to accrue. I recognize 6% of interest expense. As you can see, my liability at the end of June has gone up because I have recognized an interest expense. Thereafter, I adjust the 2,100 rupees, out of which 2,000 goes to adjust the original lease, and 100 rupees for the next 20 months adjusts the deferral of the rent for the month of June. Eventually, this balance will run down to zero because I am segregating the 2,100 into 2,000 and 100. The 100 offsets this 2,000 rupees, barring the time value of money, the standard permits it, and the 2,000 rupees offsets the original lease liability. This is how one would possibly account for deferrals of lease payments as a lessee. Let's now look at another example of waiver of lease payments as a lessor. As a lessor, as we said, two possible situations. Either the waiver is unconditional or the waiver is subject to a condition. If the waiver is unconditional, recognize the benefit as a variable lease payment in the period in which the concession is granted. So for example, if the lessor tells us, please don't pay me the rent for the month of June, you directly credit P&L in the month of June by debiting your lease liability. You debit the lease liability because it's no longer an expenditure. But if the concession is available subject to conditions being met, one will only recognize them as the condition is met. So for example, if the condition was that the lockdown should continue at the end of the month to get the waiver of the rental. Now, in the month of April, the lockdown had continued. That is the time one would have debited the liability due for the month of April to the lease liability account and credited P&L. If the lockdown continued in May, one would have then done the same treatment for the month of May. If the lockdown was released or not put in place at the end of June, one would then have said this amount is now due, the waiver is not available. And that's how one would account for as a waiver of lease payments. You treat this as a variable lease payment and the impact goes directly to the P&L account. So you recognize this as a benefit to the P&L account and reduce the lease liability on the balance sheet. That is how the entire accounting for the practical expedient of the leases work. We looked at what's a lease, we looked at the modification guidance for lessors and lessees, and then finally we looked at what is the practical expedient available for a lessee. There is no practical expedient available for a